Ingvar Kamprad, the founder of the global furniture retailer Ikea, is known for buying his clothes at flea markets, driving an old Volvo and flying only economy class. Although he is a billionaire many times over, he revels in his reputation for saving money. Now, European regulators are accusing Mr. Kamprad's company of pushing the concept of thriftiness beyond the limits of the law by maneuvering to reduce its tax bill in the countries where it operates. The European Commission, the European Union's executive arm, said on Monday that it had opened an investigation into Ikea, one of the retail giant's two main divisions, amid concerns it may have been given unfair tax advantages by the Netherlands, where Ikea is based. The inquiry is part of an intensifying campaign by European regulators to crack down on what they view as sweetheart deals between multinational companies and tax-friendly countries that have sought to draw their business. The announcement adds Ikea to a list of firms targeted by European officials for using sophisticated strategies in Ireland, the Netherlands and other European Union countries to pay few or no taxes on billions of dollars of profits. Other companies facing similar scrutiny include Starbucks and Apple. Led by Margrethe Vestager, Europe's top antitrust regulator, Brussels is also gearing up for an offensive against technology companies with a raft of proposals that are meant to increase the amount of tax paid by behemoths like Facebook and Amazon. Ikea, one of the world's largest, and most opaque, privately held companies, reported revenue of €36.3 billion, or about $43 billion, for the latest fiscal year. But for well over a decade, Mr. Kamprad, his three sons and his close business associates have relied on a complex corporate structure to slash the taxes that Ikea pays on such earnings, regulators say. From 2009 to 2014 alone, Ikea avoided paying an estimated €1 billion in taxes, according to a report last year by the European Green Party. Although Ikea is Swedish, the acronym combines Mr. Kamprad's initials with those representing the bucolic area of the country where he grew up. The company is effectively owned by a Dutch trust controlled by the Kamprad family, with various holding companies handling its franchising, manufacturing and distribution operations. The arrangement is designed to ensure maximum financial independence for Ikea, Mr. Kamprad has said. Already back in the 60s, I started to look for ways to ensure Ikea could be kept as a private company to secure true financial independence and thus the freedom to have a long-term view on our investments and in business development, he said in a statement posted on Ikea's website. I have often referred to that as securing eternal life for Ikea. On Monday, in a separate statement issued in response to the regulator's accusations, Ikea said it was committed to paying taxes in accordance with laws and regulations wherever we operate. It said it had operated in accordance with EU rules and pledged to cooperate with the inquiry.